In this video, we will dive deep into two powerful tools that can significantly impact your investment approach: the Proshares Ultra Bitcoin ETF and the Proshares Ultra Short Bitcoin ETF or SBIT. These leveraged ETFs offer unique opportunities and challenges, which we will explore in this upload. We will also analyze potential Bitcoin price movements, with predictions suggesting substantial growth by 2025. Understanding the mechanics of leveraged funds, along with their pros and cons, will be crucial for anyone looking to amplify their gains during this exciting period in the cryptocurrency market. But first, keep in mind this is not investment advice. This video is for entertainment purposes only. Do your own research. Stay tuned as we break down these complex financial instruments and forecast what's next for Bitcoin. What are leveraged ETFs? Leveraged exchange-traded funds are investment vehicles that use financial derivatives and debt to amplify the returns of an underlying index. Unlike traditional ETFs, which aim to replicate the performance of a particular index or asset, leveraged ETFs seek to multiply the daily index returns, typically by 2x or 3x. This means if the underlying asset or index increases by 1%, a 2x leveraged ETF aims to increase by 2%. And similarly, if the asset decreases by 1%, the ETF would drop by 2%. Leveraged ETFs are reset daily, which is crucial to understand because it means their performance can diverge significantly from the long-term performance of their underlying index or asset over time. This reset mechanism makes them primarily suitable for short-term trading strategies, rather than long-term investments, due to their potential for high volatility and the effects of compounding during fluctuating markets. Significance of leveraged ETFs in the crypto market. In the inherently volatile crypto market, leveraged ETFs hold particular significance. The rapid price changes common in cryptocurrencies like Bitcoin make these markets ideal for leveraged funds, which are designed to capitalize on short-term movements. For traders who can time the market correctly, leveraged ETFs provide a way to enhance potential returns without the need to directly hold the cryptocurrency. This can be especially appealing in a market known for its rapid and often unpredictable price swings. Additionally, leveraged ETFs allow investors to gain significant exposure to cryptocurrency markets with a potentially lower capital outlay compared to buying the cryptocurrency outright. This can be particularly advantageous for retail investors looking to participate in the potential gains from crypto assets without the need to manage and secure a cryptocurrency wallet. However, the high leverage also increases the risks. The same mechanisms that provide substantial returns on investment can also lead to significant losses, especially in a market as unpredictable as crypto. Therefore, understanding the mechanics and inherent risks of leveraged ETFs is essential for anyone looking to invest in these instruments in the context of cryptocurrency trading. BITU, Proshares Ultra Bitcoin ETF. The Proshares Ultra Bitcoin ETF or BITU was launched as a part of an expanding suite of cryptocurrency financial products, aimed at providing investors with leveraged exposure to Bitcoin's price movements. This ETF operates as a 2x leveraged long Bitcoin fund, meaning it seeks to double the daily performance of Bitcoin. By using financial derivatives like futures and swaps, BITU aims to provide amplified returns relative to the direct purchase of Bitcoin. Key features of BITU. The 2x leveraged target of BITU means that for every 1% increase in the price of Bitcoin on a given day, the ETF aims to return 2%, and conversely, for every 1% decrease, the ETF would potentially lose 2%. This leverage is recalibrated at the end of each trading day, which is essential for investors to understand. The daily reset means that the compounding effects can significantly affect the ETF's performance, particularly in volatile markets. For instance, if Bitcoin's price is highly volatile over several days, the effects of daily leverage reset can lead to return figures that differ from a simple doubling of Bitcoin's performance over the same period. Fees. Investing in leveraged ETFs like BITU involves certain costs beyond the market exposure they provide. BITU has an expense ratio of 0.95%, which means that annually 0.9% of the fund's assets are used to cover operational costs. This fee is deducted from the ETF's assets, reducing the fund's overall performance potential. While this fee might seem modest, it is essential to consider it in the context of potential returns, especially in a high volatility environment like cryptocurrency. Higher fees can eat into the gains made from leveraged trading, making it crucial for investors to weigh the cost against the potential amplified returns. In summary, BITU offers a way for investors to achieve significant exposure to Bitcoin's price movements without directly purchasing the cryptocurrency. However, the benefits of leveraged exposure come with increased risks and costs, necessitating a thorough understanding and careful consideration before investing. Pros and cons of BITU. Advantages. BITU presents several advantages, particularly during a Bitcoin bull run. It offers the potential for high returns by amplifying the daily price movements of Bitcoin. Additionally, it provides easy access to Bitcoin's price movements without the need for investors to directly purchase and secure Bitcoin themselves, which can be a hurdle for those unfamiliar with cryptocurrency wallets and exchanges. Disadvantages. However, the risks with BITU are also significant. The same leverage that provides high returns can also lead to substantial losses, especially if Bitcoin's price moves against the anticipated direction. Furthermore, the impact of daily rebalancing can lead to performance deviation from Bitcoin's actual long-term price movements over time. This can be particularly pronounced during periods of high volatility, where compounded daily losses can exceed the initial investment. SBIT, Proshares Ultra-Short Bitcoin ETF. Overview of SBIT. The Proshares BITU Ultra-Short Bitcoin ETF is designed to provide investors with a way to profit from declines in the price of Bitcoin. Launched as a counterpart to long-oriented funds like BITU, SBIT operates as a 2x leverage short Bitcoin fund. This means it aims to deliver twice the inverse of the daily performance of Bitcoin. For investors expecting a downturn in Bitcoin's market price, SBIT offers a strategic tool to capitalize on these movements. Leverage mechanism. The 2x leverage short position of SBIT effectively means that if Bitcoin's price decreases by 1% in a day, SBIT aims to gain 2%, and conversely, if Bitcoin's price increases by 1%, SBIT would lose approximately 2%. This leverage short strategy makes SBIT particularly appealing during bearish market conditions or periods of significant price correction in Bitcoin. It's important to note, however, that this leverage is recalibrated daily, which can lead to compounding effects that may cause the fund's performance to diverge from the expected minus 2x return over periods longer than a day, especially in volatile markets. Fees. Similar to BITU, SBIT carries a 95 basis point fee. Investors should consider these fees as they will impact the overall return on investment. Higher fees can detract significantly from the fund's gains, particularly in a fund designed to capitalize on short-term movements. This fee structure needs to be evaluated in the context of expected holding periods and market volatility, as the impact on returns can be substantial over time. In summary, SBIT offers a sophisticated investment strategy for those expecting a downturn in Bitcoin's price, providing a potential hedge or profit avenue during crypto market declines. However, the nature of its leverage, short position, and associated fees requires a nuanced understanding to manage the risks and opportunities effectively. Pros and cons of SBIT. Advantages. SBIT provides significant profit potential during periods when Bitcoin's price is dropping, offering investors a way to gain from downward movements in the cryptocurrency market. Additionally, it serves as a hedging tool against crypto volatility, allowing investors to protect other investments that are sensitive to decreases in Bitcoin's price. Disadvantages. However, the risks associated with SBIT are considerable. Shorting, especially with leverage, can lead to amplified losses if Bitcoin's price moves upward contrary to expectations. The daily rebalancing of the fund can also complicate its long-term alignment with the inverse of Bitcoin's performance, potentially leading to scenarios where losses are compounded during volatile market conditions. This makes SBIT a complex instrument that requires careful risk management and market timing. Bitcoin price predictions. Current trends. As of the latest market analysis, Bitcoin continues to exhibit significant volatility, a hallmark of its trading pattern, yet maintains a trajectory that interests both individual and institutional investors. Following a period of rapid price increases and inevitable corrections, Bitcoin has shown resilience, bouncing back from interest rate concerns and increased instability in the Middle East. The adoption of Bitcoin by major financial players and its increasing recognition as a digital gold for hedging against inflation contribute to its robust position in the financial landscape. These developments underpin its unpredictable yet upward-leaning price movements. Predictions. Looking ahead, expert forecasts and analytical models suggest that Bitcoin's price could reach between $120,000 and $150,000 by 2025. This bullish scenario is predicated on several factors, including increased adoption rates, more widespread use in retail and institutional portfolios, and continued market maturation. Economists and crypto analysts point to the growing acceptance of Bitcoin as a legitimate asset class by major financial institutions and advancements in blockchain technology as catalysts for this significant price increase. Furthermore, the halving of Bitcoin rewards, a built-in feature that reduces the Bitcoin supply from mining rewards by half approximately every 4 years, just happened. Historically, each halving event has preceded a substantial bull run, attributed to the reduced rate at which new Bitcoins are introduced to the market, thus driving up the price through increased scarcity. These elements collectively fuel optimistic price predictions, suggesting that the next few years could see Bitcoin reaching new all-time highs, aligning with our previous forecasts. Strategies to maximize gains. Strategic use of BITU and SBIT. To effectively utilize the BITU and SBIT ETFs, investors must closely monitor market conditions and trends. BITU, being a 2x leveraged long Bitcoin ETF, is best suited for scenarios where there is a strong bullish sentiment in the market. This ETF should ideally be used during periods of anticipated price increases, as it is designed to amplify positive returns. On the other hand, SBIT, which is a 2x leverage short Bitcoin ETF, can be strategically employed during expected downturns or corrections in the Bitcoin market. Utilizing SBIT allows investors to hedge against declines in their other cryptocurrency holdings or to profit from bearish market movements. Diversification. While BITU and SBIT offer high return potential, they also come with increased risk, primarily due to their leveraged nature. Diversification is a critical strategy to mitigate these risks. Investors should consider these ETFs as part of a broader investment portfolio that includes a mix of asset classes, including non-correlated assets such as stocks, bonds, and other commodities, can help manage the overall volatility and reduce the potential impact of adverse movements in the cryptocurrency market on the portfolio's performance. Timing and market analysis. Successful investing in leveraged ETFs like BITU and SBIT requires excellent timing and thorough market analysis. Due to their daily reset mechanism, holding these ETFs for extended periods can be risky, especially in volatile markets. Investors should develop a disciplined strategy for entering and exiting positions to maximize gains. This involves setting clear criteria for buying and selling based on technical indicators, market sentiment, and upcoming economic events that could influence Bitcoin prices. Utilizing tools like stop-loss orders can also help manage risks by automating sell-offs at certain price levels, thus protecting against significant unexpected downturns. In conclusion, while BITU and SBIT can significantly enhance an investor's ability to profit from Bitcoin price movements, they require careful handling due to their complexity and inherent risks. A balanced approach involving strategic use, diversification, and precise timing is essential for leveraging these tools effectively while managing potential downsides. Risks and considerations. Volatility. The cryptocurrency market is known for its high volatility, which can lead to significant price swings within very short periods. This characteristic is magnified when dealing with leveraged products like BITU and SBIT. While these ETFs can amplify returns, they can also exacerbate losses, particularly if the market moves against the position. For investors, this means potential rapid and substantial value fluctuations, which require a robust risk management strategy to navigate effectively. Market timing challenges. Timing the market is particularly challenging with cryptocurrencies due to their unpredictable nature and susceptibility to external influences such as regulatory news, technological developments, and changes in investor sentiment. Leveraged ETFs, which are designed primarily for short-term trading, compound these challenges. The daily rebalancing of these funds can lead to outcomes that are drastically different from the expected long-term trends of the underlying cryptocurrency. Investors need to be highly vigilant, responsive, and informed to make timely decisions that align with sudden market shifts. Long-term versus short-term investment perspectives. Choosing between a long-term and short-term trading strategy in cryptocurrencies should be driven by individual financial goals and risk tolerance. Leveraged ETFs like BITU and SBIT are generally more suitable for short-term strategies due to their daily rebalancing and the compounding effect of their returns. Long-term investors might find the volatility and potential decay in value of these products challenging to manage over extended periods. It's crucial for investors to assess their comfort with risk and their investment timeline before engaging with these high-stakes instruments. For those with a lower risk tolerance or a long-term perspective, directly investing in Bitcoin or diversifying through more traditional, non-leveraged crypto funds might be a safer alternative. Understanding these risks and considerations is essential for anyone looking to invest in leveraged cryptocurrency ETFs. While they offer opportunities for significant gains, they come with a set of challenges that demand careful planning, constant monitoring, and an acute awareness of market conditions and personal investment thresholds. Like we said earlier, this video is for entertainment purposes only. Do your own research. This is not investment advice. In this video, we've explored the dynamics of leveraged ETFs like BITU and SBIT and discussed potential Bitcoin price movements heading towards 2025. While these tools offer innovative ways to enhance gains, they also carry risks, especially given the inherent volatility of the crypto market. We encourage cautious optimism and recommend thorough research and risk assessment before diving into such investments. To continue learning and stay updated with the latest in Bitcoin investment strategies, please subscribe to our channel. Share your thoughts in the comments below and consider sharing this video with others interested in cryptocurrency investments. Your engagement helps us bring more valuable content your way.